You can steal this strategy to catch the highs and lows of the day every single day. My name is Kieran Davis, aka the Master of Coin, and I'm really excited to share with you this indicator I found that literally allows me to catch the highs or the lows of the day every single day. First thing what you want to do is go ahead and go on TradingView. Now, if you don't know what TradingView is, it's a platform for free. You can go on and mark up charts, use different indicators, and so forth. Then simply come up here to the indicator section and just type in best Asia range indicator and click the one by IK Davis. This was actually my old Instagram handle. What you want to do is go to the settings and simply copy my settings here. Because again, if you don't, look, you're going to lose a bunch of trades. The indicator's not going to work. Now you're going to be crying in my DMs going, Kieran, it doesn't work. Change the settings, please. Literally just go click the little cog, the settings button, max time frame to display, 60. Make sure you check display Asia range, uncheck deviations, deviations 2. The color, I mean, this is down to you. I like to have it yellow because you don't need the yellow snow, so don't trade in the yellow box. This is important. The session should be from 2000 hours to 0200 hours. Now, uncheck display London Open. Again, we're not going to display London Open. Uncheck all of these. Uncheck, uncheck, uncheck. So the only ones you should have checked is display Asia range, yellow snow, so yellow color, and then 2000 hours to 0200 hours. And that's it. Style is just boxes and lines is fine. And then visibility, you leave that. You don't need to touch that. So how Asia range works is basically a period of time from 8 p.m. to 2 a.m. Eastern. And essentially what it will do is just plot some yellow ranges on the chart. So if we go to the chart here, we can see we've got these yellow boxes that display the Asia trading session. Now, I don't trade the Asia's trading session because Asia, the economy is smaller to the US and Europe and the UK. So normally I find that the positions that happen during Asia tend to get manipulated. So what you want to do is find, for example, a higher time frame point of interest. So look left and make sure you know where you are. Pay attention to the economics and the fundamentals so you know whether you're looking to buy or sell. Because remember, your direction doesn't come from the charts, it comes from your fundamental analysis. And look, we've done so many videos on fundamental analysis, and we actually teach this highly in depth inside the Master of Coin community. So if you want to trade live with me 3 times a week, you can go down to the description and join now, or you can apply for the one-to-one mentorship. So it will plot this Asia range on the chart. And what you want to do is come in during Frankfurt session. So London session and Frankfurt is the first hour after Asia close. And typically what will happen is Asia will create some sort of trading range and consolidation. Then Frankfurt, which is that first hour, will give you some sort of manipulation. So if you're in a bullish environment where you've looked at your fundamentals, you know that you may be in risk on, and you're seeing, for example, the dollar fall, maybe you're trading a pair like Euro USD or GBP USD. What we can now do is look for those buys. So we'd find our Asia range, we'd let Frankfurt session, so that first hour, right, just after Asia session ends, we'd let that come in and manipulate the Asia lows. Now, once it's manipulated the Asia lows, you want to wait for a break to the upside. And what this is going to do is confirm your Wyckoff accumulation. So you can see obviously the Wyckoff accumulation on screen here. And essentially what we're doing is catching the spring of the accumulation during London, because London will typically print the high or low of the day. So once you've got this, you can now come in, you can measure your manipulation, you can come in and set limit orders on that 50 or 80% of your fib. And again, I've done videos on the fibs before, so you can go on the channel and find them. Set your limit for the buy off the 50 or the 80%, depends on the risk to reward. Take your trade, and then you'll be laughing to the bank. Now, if you are selling, it's the same principle, it's just the opposite. So what you'll do is come to the market again during that London or Frankfurt to get the high or low of the day. During Asia, you'll see that trading range start to develop. And then what you want to do is let Frankfurt, so that first hour of London, sweep the highs for your UTAD of that distribution. And again, if you're like, what is Wyckoff? What's a UTAD? What's a spring? I've done a whole Wyckoff bootcamp on my channel, so go and check that out. But you want to see that manipulation of the highs of Asia and the highs of the price action be swept, followed by a break to the downside. And once it's given that break to the downside, same thing, you come in, you measure that manipulation, you can set your limit orders on the 50 or the 80%, get ready to take your sales, and then you'll be laughing to the bank. Now, a couple warnings with this. Make sure every time you're doing this, you have alignment with the fundamental analysis, and B, you're actually in a point of interest to the left. So many people will just go to the market, find a random Asia low, it's been swept, and then try and buy it. Make sure you are in a point of interest to the left and there is a reason for buyers or sellers to actually come in the market at this point. Because if there's nothing to the left, you're never going to trade right. So remember, what not to do, don't just go to the market like this and say, look, Asia low's been swept, and then come in and try and fib just a random manipulation and expect it to work out. Because without the higher time frame picture, without the context of the market and the fundamentals, none of these trades will work. You need to have the context and the higher time frame in alignment, otherwise it's never going to work and you'll be ending up taking trades like this. Let's get into an actual case study and apply this in the real market. So this was a position we took on CAD and the fundamentals told us it's bearish at this point in time. And again, if you want to go to the charts and back test this, you can go back to the 12th of September and see the exact trade for yourself. Again, I've done videos on fundamental analysis before. You can go on our channel and check them out. So our fundamentals told us to sell this market. We then had to confirm that with the right Wyckoff price cycle, where in a bearish market, we'll consolidate. During the consolidation, it will manipulate the highs, followed by a break of structure to the downside. And upon that break to the downside, that's confirmed your redistribution. So that prior consolidation and the manipulation is now your point of interest. You wait for the market to return back to that 50 or 80 level in the future. And once it does, you now wait for a lower time frame distribution if you're selling. And again, you can see the distribution on screen here, right? And you want the Asia session, right, to be phase A and phase B of your schematic. And that UTAD you can see, you want that to happen with an Asia manipulation like we explained earlier. So if this is a 15-minute point of interest, I'm just going to drop down to the minutes time frame to actually find my entry. And if we plot on our Asia session indicator, we can now see that our schematic is being formed during Asia. So that phase A and phase B will tend to get formed during Asia session because this is where time is passing, opinions are forming, and obviously because it's Asia, there's lower volatility, that's why it's consolidating. You can see the market comes in, it builds that trading range, right? We get our buyer's climax, automatic reaction, secondary test, minor sign of weakness, up thrust, and then our UTAD. But notice when the UTAD happens, it's happening during that first hour. Notice when that UTAD is happening. That manipulation is happening during Frankfurt and London session to give us that high of the day because we're selling. And obviously if you're buying, it's literally just the opposite. You have a demand zone to the left, wait for it to come in, and then you want to see London give you that low of the day, manipulating the Asia lows. But obviously we're selling. And then once we've done that, we've got that manipulation of the high and we've got the break to the downside. You can see it broke the last low, the impulse of our entire leg. It gave that sign of weakness. And then we fib that manipulation. Now, what we can do, right, if you want to just be very vanilla with this, what you can just do is take an entry off the 50%, stop loss resting above the 80%, and then take another entry at the 80% just as a backup. And obviously then zoom out and target the new low of your higher time frame. Now, for me, this wasn't a 1 to 10, and I need minimum of a 1 to 10. So if I don't get those 1 to 10s, I'll either just scrap the trade completely, or I'll start to apply some of my refinements. Now, one of our refinements is looking what is actually at the 50 or the 80%. And if you see imbalance at the 50 or the 80%, it's not going to work because there's no reason for sellers to show up here. But if at this 50%, you can see a lower time frame redistribution or supply zone, your stop loss doesn't need to be above the 80%. It can now be sitting above that supply zone or that lower time frame redistribution at the 50%. What we're doing here is building confluence. It's when you have multiple reasons and multiple signs line up at the same time. Remember, these markets are not random. There's always logic and there's always reasons why price will do what it's doing when it's actually doing it. It's our job as analysts to decipher that and read into it. So this is only valid though if it actually causes a break of your trading range. So right now it hasn't broke the trading range, so I wouldn't set any limits on it. But once it comes down, if we zoom out, and actually breaks that trading range, which you can see down here, it breaks it, we can now come in and set that limit on it. So when it comes back up over here, right now, another key thing, time of day. New York session will typically give you continuations of the overall trend. So It may not give you an entry during London, that's fine. What can happen is it can print the higher low of the day during London, and then during New York later, come back, fill you for your entry before obviously going into your target. So here during New York session, this is around 3 p.m. UK time, just after New York Stock Exchange open, it comes in to give that continuation play, and we can refine our stop loss by putting it above this lower time frame redistribution. Now, again, I have done videos on this in so much more detail if you want to get more specific with this strategy. Or you can just attend our live calls that, again, I do 3 times a week where I do all the analysis for you. But in this case, we applied that lower time frame refinement above that redistribution that caused the break. Now, I would also have a backup entry here, and I would look at this 80% up here, and I would set another limit order on this 80% just in case it actually invalidates the supply zone, because ultimately our line in the sand is that high of the day, which is obviously printed during London session. See, she comes in, fills us before starting its movement towards our target. And you can see it comes in, fills us, and starts to actually move towards our target. Now, realistically, is this going to happen every single day? Okay, you caught me. Maybe I lied a little bit. It's not going to happen every single day. Every day is not a trading day. And if you have this mindset that every single day you're going to take a trade, well, this isn't a 9 to 5. This isn't a job. This is trading. You got to be realistic. Sometimes these opportunities may only happen 1-2 times a week, and that's okay. Right? You don't need to catch a trade every single day. 1 to 2 high quality setups a week is enough to get you out of your 9 to 5. Focus on quality, not quantity, where the setups you're trading have more confluence, where you've got multiple pieces of this puzzle lining up. For me, Asia session is not the end all and be all. It's just one confirmation out of an arsenal of confirmations we have inside our trading. So with your current strategy now, if you're trading Wyckoff, if you're trading smart money, go to the markets, plot this Asia range indicator with the right settings, and wait for that Asia range manipulation before you start to take your trades, and watch your win rate really start to skyrocket. Now, when you are actually doing this, make sure you send your chart work to someone who actually has the results you want to validate if you're even applying it correctly. Because if you're going around doing it by yourself and finding that it's not working, it's probably because you're not applying it right. You need the bigger picture. And just remember that this Asia range indicator is just one confluence out of an arsenal of different tools we use in the markets. So just because you've got an Asia range manipulation doesn't mean that you buy the market. If you can now see that it's got a higher time frame point of interest, you're at a demand zone, you've got a fundamental reason to buy the market, and you've got a target followed by that lower time frame accumulation, now you can use your Asia manipulation for a more precise entry versus just randomly buying any old Asia manipulation. So build the confluence, stay patient, stay disciplined, and the gains will come. If you guys did enjoy this video, don't forget to comment, like, and subscribe, and let me know in the comments down below one thing you liked, one thing you learned, and one thing you want to see next on this channel. But with that being said, I'll see you all at the top, from the top, because you already know, man, that bottom is way too crowded. Sheesh.